Hi everyone, this is Michael Kramer. Today is Tuesday, November 25th, and it's around 4:30 p.m. New York time. So the economic calendar has changed around a little bit. There'll be no GDP or PCE report on Wednesday, November 26th. Instead, we'll just be getting the usual mortgage applications, which we get every week. Durable goods, we'll be getting initial jobless claims a day early because Thursday markets are closed for the Thanksgiving Day holiday here in the U.S. We'll have a 7-year auction also later that afternoon. And then that will be pretty much it until we come back on December 1st, because the markets here will also have only half a day of trading on Friday, the 28th. So news flow will be very light basically the rest of this week, with just really initial jobless claims as a standout data point. And then next week on the 1st, we'll go back into the ISM schedule, although it's not really clear what kind of economic data will be coming for the month of November. When it comes to the U.S. government, it sounds like some of it has been delayed or won't be coming at its normally scheduled interval. That said, we have seen the euro actually strengthen some the last couple of days, which is just creating a lot of back and forth and confusion, to be honest, in currencies, because we're not really into a flow yet of economic data that's up to date. And so we're seeing basically currencies just really flatlining and trading in a range, with the exception of the yen. But you can see that the euro moved up today and strengthened versus the dollar, but wasn't really able to get past some of the resistance levels that were really needed. We can see it certainly cleared the 10-day exponential and the 20-day simple moving averages, but it wasn't really able to get past this 115.80 region, which has been an important area of support and resistance. And really, you can trace it back to an area that goes all the way back to October of 2021. It still looks like the euro has the makings of a potential head and double top pattern, but we haven't really yet broken the neckline at 114. You could begin to start making an argument that the euro is actually forming a short-term double bottom here, but again, we would need to break above the neckline at 116.60. So, and the other positive thing here from the euro standpoint is that the RSI is clearly trending higher now. You could also make an argument that momentum is starting to shift. So right now we're kind of waiting for some sort of clearer signal from the euro, whether it be a undercut of these recent lows around 114.90 or breakout above 116.40. Otherwise, it looks like we're in a little bit of a state of limbo here with this currency, at least until we get some more economic data that's more current, or we get some sort of signal in terms of whether or not the Fed is going to move forward with a rate cut in December. But for that, we may have to wait a while longer. The British pound also has tried to make a move higher against the dollar ahead of that big budget meeting on Wednesday, November 26th. We can see right now that there's clearly a big downtrend that's been in place for the pound now for some time. We do have an uptrend that appears to be trying to form on the RSI, and you can see today on the 25th, the pound tried to break out actually, and you could argue that it was a successful breakout because we closed above the 10-day exponential, the 20-day simple, and the downtrend that was in place. And I think is a pretty important development. Now, obviously, any breakout needs confirmation. So if you're bullish on the pound, you really need to see the pound extend today's gains tomorrow and really close with a higher high tomorrow than what we had today. And that would give us a better comfort feeling of thinking that maybe the pound can extend up to 132.70. Obviously, this is a very powerful downtrend that's been in place, and so it wouldn't really be a terribly big surprise if we actually saw the pound not confirm that move and actually finish tomorrow lower, especially with the volatility that's likely to come around that budget announcement. And so we'll just have to, keep your eyes open. Clearly a breakout above 132 would really be a very bullish signal, suggesting that we could be heading towards 132.70 and potentially back over 133. Last time it was noted that the yen was getting pretty overextended, and that's been the case now, and it looks like we've come back in the Bollinger Bands. We've eased off the RSI, and so it looks like the yen is no longer as overextended as it was in the weakening phase. The interesting thing here is that the yen has also managed to bounce off the 10-day exponential moving average and has managed to find support at this trend line, which marks the upper bound of that rising wedge pattern. It's possible that you could see the yen come back down and through the rising wedge. I mean, that does happen sometimes, and it is a classic type of reversal that we see. It's called a throwover, and so that's certainly a possibility. The other possibility, obviously, is that the yen just continues to weaken up towards 158.5. Again, the situation in Japan seems to be currently one of increased government spending, and a Bank of Japan that doesn't really seem very willing to move on interest rates. And so, watching where rates are in Japan are probably fairly important, because my guess would be is that if we started to see interest rates in Japan begin to inch higher again, it would likely be accompanied by a weaker Japanese yen versus a dollar. Gold continues to struggle around the 41.40 area. We tried to break out above it back on the 13th. Weren't able to do that. We came back down and found support at the 10 and 20-day moving averages. Now we tried to move back up above it and hit 41.40 today, and that we weren't able to successfully get out above it either. I guess the one thing that's worth pointing out is that, with gold basically trading sideways here, we've more or less seen volatility begin to decline in gold, and that could really be an indication that some of that momentum we were seeing when in volatility and the price were rising is really kind of fading out here. And so, again, what it's looking like is the potential that gold is not going to be able to push higher and turns back down and retests these lows around 39.40 first. I mean, there's obviously a good chance that gold could make that move, and I think it would be more convincing if you actually saw implied volatility in gold rising, or at least moving up along with it. But with implied volatility moving down, it makes it a really tough sell in my mind to convince me that gold is actually going to be heading higher from here. Also, when we look at silver, we can see that it actually had a 100% retracement of the sell-off that we saw back here in late October, and now we're kind of just hanging around the 61.8% retracement of this decline. In fact, it's been serving as resistance now for the last couple of days. I mean, I guess if you look at it and you wanted to make a bullish argument, you could make an argument and say that we have some sort of cup and handle pattern forming here, and that would be a bullish pattern suggesting a breakout. But outside of that, I'm not really seeing much evidence for a move either way at this point, other than the fact that you are seeing momentum decelerate with an RSI trending lower. The DAX has recently, as we noted last week, fallen below support at 23,400, and today on November 25th, you can see the DAX made about a 1% move, rising right up to the 10-day exponential moving average, closing right actually below it at 23,464.64 versus the 10-day at 23,465.70. So this area around this 23,465 is still a very important area of resistance, and I'd imagine that if we can see the DAX actually break out and move higher, the next area of resistance would come around the 20-day simple moving average around 23,750, which is also trending lower. And then right above that, you have more resistance at 23,870. So it's possible we do see the DAX actually rally some before hitting a pocket of resistance in this 23,750 to 23,870 region. again, if we fail, then I think you're looking for it to undercut this low and potentially head even lower. I mean, ultimately, until you get above the 20-day moving average, I think the trend in the DAX is lower, because that's just, I mean, it's very clear here at this point. That's the way the trend is going. The FTSE has also been basically trending sideways. Last week we were thinking that maybe it could head lower and get to this 9,300 area, but to this case that really hasn't happened, and that was because we had seen copper weakening. And right now we still, that copper is still very similar position to where it was last week, and we still have that potential head and shoulders pattern that's formed, but copper hasn't broken down through support to really warrant a further move down in the FTSE. Obviously, on the 26th, there's a budget in the UK as well, which may or may not play a factor in this. But I still would be mostly watching the direction of copper, because it just seems to be the most highly correlated to the FTSE at this point. And there is obviously that potential head and shoulders pattern in it. And so I would think that if copper broke 495 or so, that would probably be a bearish signal for the FTSE and a potential return to 9320. We've seen the NASDAQ rally now 3 days in a row after having a really rough week most of last week. In fact, we had that big intraday reversal on the 20th, the day after NVIDIA reported results, and it looked like the NASDAQ was going to really be in trouble that day. But since then, we've been able to really get a pretty decent sized rebound. The only thing here that stands out to me is that, we're back above the 10-day exponential moving average, at least for one day, 2 days actually. So that, I think, is an important development. But, you need to really see 3-4 days of this before you can start getting excited that the change in trend. Additionally, you can see the 20-day moving average is up here at 25,200 or so. And we can also still see that the trend in momentum is still lower. So right now, if we can get the NASDAQ to actually surpass this region between 25,000, call it 100, and 25,250, if we can surpass that region, then it would seem to me that the next area of resistance comes right around 25,600, which also would coincide with this trend line that was broken, that was formed back at the beginning of September. On the S&P, it's similar, except the S&P was able to break above the 20-day moving average on the 25th, and it was also able to get back to the trend line, although it doesn't look like it surpassed it. It looks like it just about got to it. If the S&P continues to go higher from here, I mean, the most obvious place that it would appear we would be heading to is this gap up here at 6,850. That would be the most, that would appear to be the area with the greatest likelihood that we would be heading towards. The one thing that I would note is that there appears to at least be on the short-term chart a potential rising wedge pattern that's formed, and it's possible that this is forming a ending diagonal triangle. But again, this would be something to watch just for one day. If we were to gap higher on the 26th, that would certainly clear the way for this gap fill at 6850. But obviously, if we were to break below this trend line at 6760, that could actually set up a return to the intraday lows on the 25th at 6660, which is about a 100-point range. The Dow also was pretty strong today on the 25th, rising by about 1.5%. Right now, like the S&P, there's this nice big gap to fill up here at 46,406. There's a nice big gap to fill at 47,450. But when you look at the Dow a little bit on a longer term basis, you can see that the trend line was broken, and it would appear that we were able to retake that trend line, at least as of the 25th. It also looks like we were able to retake a bunch of the moving averages, although we barely closed above the 20-day moving average on the Dow. So again, there is potential for further upside here, but there's a lot of resistance in this 47,200 to 450 region. to be aware of. Anyway, hope you have a great week, and we'll see you next. Bye.